from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a prime price hike. Amazon raising the cost of its central subscription service by $20 to $139 a year. Shares jumping about 18% in late trade. How many users will really pay more? We'll discuss. Plus, Meta makes history, the unwelcome kind. The stock plunging, wiping out more than $230 billion of market value after reporting Facebook's growth has stalled. And NFTs, crypto, and much more. We'll talk about it all with Reddit co-founder Alexis Ohanian on the heels of his VC firm raising $500 million to invest in the companies of the future. All of that in a moment, but first, we've got to get to these massive market moves. Meta plunging, Amazon soaring after earnings, and Snap taking off like a rocket. Ed Ludlow here to walk through all the high highs and low lows, low with Facebook specifically.
Em, I hope you've had a strong cup of coffee today. Let's do this. NASDAQ 100 down 4%, biggest drop since September 2020. Why? Meta Platforms, parent company of Facebook, down 26.4%, wiping out $252 billion of market value, the biggest wipeout of market value in a single day by a US company in history. And clearly the equity markets turned on this. It snapped 4 days of gains across the NASDAQ 100. We were in risk-off sentiment, and you see the Bloomberg Galaxy Crypto Index, that basket of the most valuable tokens that Bloomberg covers, also down in a broader risk-off environment. Let's look at the NASDAQ 100, right, over the last 5 days. We asked this question all day long. Is the rally in tech stocks over? Well, I mean, at least it's on pause, right? We have stopped dead the momentum we have, which was the best run and gains in the NASDAQ 100 since November of 2020. Another number, Emily, for you to hit in your head and keep in your mind for the time being. We've got to get to the after-hours action, and I'm laughing because what is happening, Emily? What? Snap is up 55% in after hours. It had been up as much as 58%. A really big beat on the top line. User numbers coming in much better than expected. Pinterest also getting in on the act. Ford has a beat on the top line in the fourth quarter just gone. It misses on the bottom line, and it's given a pretty gloomy outlook for 2022, which, by the way, includes rising inflation, supply chain disruptions, ongoing semiconductor shortages, and rising commodity costs. Okay, let's get to Amazon. Amazon after hours, what is it doing? Okay, we're up, but here's the thing. A bit of a mixed picture. 18% gain in after hours, a strong fourth quarter, but a pretty conservative outlook for the current quarter, which the street is still digesting. But the big takeaway, price rises for Amazon Prime and strength in the cloud unit. I'm going to leave it there. That's it. I'm out. I'm done.
A lot of shares changing hands today. That's all I can say. I want to stick with Amazon and bring in Melissa Burdick, co-founder and president at PacView and Amazon veteran. Melissa, what do you make of the prime price hike and whether people are really going to pay more? Is this investor reaction? Does it make sense?
Yeah, I definitely think so. I mean, they've had a history of raising prime prices every 4 years. We're at that 4-year mark. I've heard analysts say that an additional $20 price increase will add another $1.6 billion in revenue for Amazon. And they've had tons of, there's cost increases coming, so there's a lot coming their way. So, they've also added a lot of benefits to Prime. So, yes, it makes total sense. It's at that 4-year mark. And the other thing is that I think half the U.S. population is a Prime member, and their retention rates are super high. So I think it all makes sense.
So let's talk about then how they keep members coming back to Prime, right? They got to keep sweetening that deal. Does that mean, continuing to spend billions of dollars on Prime Video or something else?
Well, they continuously add more benefits. They have definitely added lots of new streaming capabilities, new shows, Jack Ryan. They will continue to do that. But I think at the end of the day, people love the Prime membership. They love the fast shipping. They like how easy it is. And so I think it's a no-brainer for a lot of people that are already in the business now.
Let's talk about what's next for Amazon. Obviously, we've had this big leadership transition under Andy Jassy. We're coming out of a pandemic where there's concern, how many people are going to keep buying things on Amazon. And you've got stiffer competition from Target and Walmart and others who've really shored up their e-commerce operations.
Yeah, I mean, I definitely think that there is competition coming, but one of the strengths of Amazon, and I think one of the reasons why we saw such great results in Q4 is the power of their third-party marketplace. So others like Target and Walmart, they also are looking at increasing their third-party marketplace as well. But Amazon has such a great lead ahead in that area. They fill in selection gaps. So there's this huge supply chain, shortage this year. And so it was the place where you could go to find anything that you wanted. So if your favorite brand was out of stock, a third-party merchant was able to fill in that selection gap. So I think that that's one of their greatest strengths, and it will continue to do so.
Does a rise in the stock price this big, do you think it'll have a significant impact on retention and recruiting? I mean, there's been concern, obviously, about the stock languishing. That equity is a huge part of retaining employees at Amazon.
Absolutely. That's interesting that you bring that up, because there has been such a huge exodus this year at Amazon, especially within executives. A lot of people say it's because of the compensation. They place a lot of emphasis at Amazon over stock, and that takes up a lot of your compensation. So the fact that the stock has declined so much this year has resulted in people making less money, and so they're going other places. I think that's another reason why Amazon's probably going to have to look at better benefits, more pay for their people. So I think that might be coming too.
What about, when it comes to the fulfillment centers? I mean, clearly Amazon has been battling an image problem, a sort of likability problem, especially when it comes to how the company treats warehouse employees. They've definitely raised the minimum wage there, but an equity jump doesn't necessarily have an impact on them.
Yeah, I mean, there has been a lot of press around that this year, but I also think that Amazon is committed to helping their people, and they've said that. So they definitely have some work to do in that area, and I believe that they will focus on doing that.
All right, Melissa Burdick, president of PackView, former longtime Amazon employee. Thanks so much for joining us. I want to get now to Meta, of course, shares plunging more than 25% in this epic rout. Huge in terms of scale. This is unlike anything Wall Street or Silicon Valley has ever seen, and certainly Facebook or Meta itself. Bloomberg's Sarah Friar joining us now to break it all down. Mark Zuckerberg had a meeting with the troops today to talk to employees, try to give them some encouragement. What did he have to say?
And our own Naomi Nix got the scoop. It was really an interesting event. He appears and his eyes are red, and he makes this joke that if he starts to cry, it won't be because what he's about to talk about. But it turns out he scratched his cornea, and he explains to the employees that, listen, this is the part where they're going to have to really own video. They're going to have to figure out Instagram Reels. They're going to have to figure out a way to go up against TikTok. They've never faced this much competition. And there also was a little bit of discussion of how to retain employees. Employees asked for longer weekends, perhaps, talked about their burnout. And of course, they've been really watching the stock price. Some employees are considering buying the dip, while other employees are worried about what's going to happen to their net worth. Mark Zuckerberg's has dropped $31 billion today in a historic wealth loss.
Let's talk about Mark Zuckerberg, what he's had to say about TikTok. Take a quick listen to this.
People have a lot of choices for how they want to spend their time, and apps like TikTok are growing very quickly. And this is why our focus on Reels is so important over the long term.
Sarah, what's the sense you're getting from employees? I mean, we were just talking about a stock going up, impacting retention at Amazon. How does a stock going down when Facebook's already facing these huge reputational issues in the middle of a big pivot to the metaverse that nobody knows for sure if it's going to work out? How does that impact employees at Facebook?
Well, it's not good for morale. I mean, this is a company that has been through a lot reputationally, but the stock has always gone up. Revenue has always gone up. User growth has always gone up, and now they're hitting a wall. And so if you're an employee at Facebook, maybe you didn't leave for any of the scandals. Maybe you didn't leave during any of the congressional hearings or privacy problems. Maybe you thought, well, hey, I'm still building great things and I can pay my mortgage and I can do what I want to do with my life. Well, if your net worth just lost a quarter of its value today, you might start to think of getting another job. And the employee shares vest on February 15th, and they are having their regular bonus season in March. And so one thing we really are going to have to watch is what happens. Do we see a brain drain at Facebook? Do we see Facebook trying new things to recruit people? And obviously they do want to recruit a ton of people. They need those people in order to usher in this new era of the metaverse, the immersive internet idea that Zuckerberg has.
So let's talk about what's going on with Snap. Is all the money that's coming out of Facebook today going into Snap?
Well, one of the big challenges is the Apple privacy changes, saying that companies can't track unless users opt in. And that was a big factor that Facebook said was affecting its earnings, contributing $10 billion in damage from that Apple problem. So people thought that would happen with Snap too. But Snap had a great quarter. They had their first GAAP profit ever. Evan Spiegel really ushered in this new era of augmented reality advertising, and a lot of retailers are excited about it. This is a company that's done very well. Pinterest has also done very well in this quarter, which shows that the Apple problems are really maybe mostly Facebook problems.
All right, Sarah Farr, we're going to continue to watch all of these stocks. Huge, huge moves. Also listening in to these earnings calls, our Sarah Farr, who covers Snap, Facebook, and Big Tech for us. Thank you. Coming up, fresh off a massive deal with Microsoft, we break down results from Activision Blizzard with Hope Cochran, Managing Director of Madrona Ventures, also a former top gaming exec at the maker of the hit mobile game Candy Crush, which got bought by Amazon back in the day. What she thinks of the latest rush of M&A? Next. This is Bloomberg. Nintendo is cutting the sales outlook for its highly popular Switch for a second quarter in a row. The company says it expects to sell 23 million units instead of 24 million, blaming lower than expected sales on chip shortages and shipping issues. This comes just one day after Sony cut more than 3 million from its PlayStation 5 sales forecast, blaming the chip shortage and shipping costs, which they say have gotten so expensive, Sony expects higher profit despite lower PS5 sales. I want to stick with the world of gaming now, and Activision Blizzard also out with its results, falling just short of expectations. This after just 2 weeks since Microsoft announced that nearly $70 billion deal. For more, I'm joined by Hope Cochran. She is the Managing Director of Madrona Venture Group and was also the CFO of King Digital, which was acquired by Activision Blizzard back in 2016. King Digital, of course, the maker of the very popular game Candy Crush. Hope, thank you so much for joining us. What's your take on this big Microsoft and Activision deal? Does it make sense to you?
It does make sense. Emily, hi, it's good to see you, and thanks so much for having me on. You know, when you think about January in the gaming world, it's been quite a month. You know, we started on January 10th with Take-Two announcing that they were buying Zynga for $12.7 billion. That seemed like a fairly significant transaction. A week later, we had Microsoft coming in to buy Activision at, you said, almost $70 billion, $68.7 billion. And then we ended the month with Sony buying Bungie. And we can't forget about Wordle being bought by New York Times. So incredible activity in the gaming industry in this 1 month period of time. So way to kick off the year. When I think about Microsoft buying Activision, it makes a tremendous amount of sense. I mean, they're getting a tremendous asset in the Activision library, in the franchises that Activision has built up. They're also getting an incredibly amount of engaged users. You know, I think today in the earnings report, Activision talked about 370 million monthly active users. And that user base loves those games and loves engaging on a regular basis. So Microsoft is also gaining that user base, which is pretty exciting, and just a talented group of employees as well, you know, is coming over with the acquisition. So there's a lot of good in that company, and you really can see the two combining nicely together.
But what about the cultural issues? I mean, you know, you briefly were part of the Activision family. I'm sure you've been watching the ongoing litigation and sexual harassment concerns. Can Microsoft get that under control? And should Bobby Kotick still be the CEO?
Microsoft has a job to do. And let's remember that this acquisition is expected to take through June of 2023. So there's quite a bit of time to work through those. Now, we know these problems don't end quickly. When I think about my time at King, that's when Gamergate came out. And that's when the big discussion about women in the gaming industry was first brought to light. It's been an issue for a long time, and it needs to be addressed. So it's good to see that it's getting the focus that it needs, and whether it's fixed under Activision during this period, I'm sure it'll have more to go once Microsoft takes it on.
How concerning are the supply chain issues, seeing now Nintendo and Sony, just talking about how difficult these challenges have been to navigate?
The supply chain issues are throughout our economy, aren't they? I mean, it's tremendous how they're impacting everything from the shortage of chips to just the actual ability to get goods where they need to be. We're feeling it in all different industries. They're saying, and I don't want to speak specifically to chips or to the supply chain, but it's going to take a full year for this really to work through the system. So it's really impacting, all of these different companies.
Now, I want to talk a little about some of these other deals that are happening. Bungie, Halo, Destiny. What do you make of all of this consolidation that we're seeing? Is it really good for the industry when the government and really society is scrutinizing the power of big tech?
Yeah, it's a challenging one to think about in that regard. I mean, clearly there will be a lot of regulatory scrutiny around it, but the gaming industry is pretty disparate. I mean, there are a lot of different gaming companies out there. So it's hard to say that one has, greater influence over another. So there has been a lot of consolidation. I do think it makes a lot of sense when you have a franchise or an IP that is really well known and well loved to have lots of different avenues to be distributed of. Those fans want to access those IPs and those franchises in any way they can. So enabling them to have that access is really exciting. When you think about Bungie being bought by Sony, I just think that's such an exciting development, especially, for both companies, but for Bungie, and having Sony have that property has been one of the top PlayStation games for a long time. And so it'll do really well under the Sony name, but also they're ensuring that Bungie will be its own company and be able to operate as it did before, as they were so clear to state. So, I think there's a lot of consolidation. They can leverage a lot of the ways to reach consumers, but hopefully maintain the magic of those independent studios.
All right. Hope Cochran, Managing Director of Madrona Venture Group. Thank you for sharing that perspective with us. Coming up, my conversation with California Congressman Ro Khanna on the heels of his new book and how Congress should rein in big tech. That's next. This is Bloomberg. From Meta and Google to Twitter and Apple, Silicon Valley is home to some of the world's largest technology companies, and it is that influential part of California that Representative Ro Khanna represents in Congress. Khanna is out with a new book called Dignity in a Digital Age, in which he argues for a decentralization of tech power and wealth away from major cities like San Francisco to create job opportunities across the country. I spoke with him earlier and asked him about what he found most troubling when you look at the biggest tech companies right now. Take a listen.
I think there's an insufficient concern for dignity and human agency online. What is most troubling to me is people having surveillance on everything we do, everything we think about or type in online, and then these companies getting that data. I cite Tim Cook's commencement speech at Stanford, where he said to be human means that we need some zone of privacy, some place where we can't just be manipulated with information about us. And that's why I worked with Tim Berners-Lee on an Internet Bill of Rights so that you would have to opt in to give your data, and we couldn't just have companies taking this data from us. That, to me, would help be a first step in preserving our dignity online.
Now, we're in the midst of one of the deepest partisan divides in modern history, but tech seems to be a place where Republicans and Democrats are finding common ground. That said, the devil's in the details. When and where will there be consensus specifically?
Emily, there's been consensus on the Innovation Competition Act, so we're going to see the largest investment in technology since the Kennedy days, and that's going to be distributed around the country, and it will have the CHIPS Act, which is going to have semiconductor manufacturing. I was very, very proud to work with Senator Schumer on that, and Congressman Mike Gallagher, Senator Todd Young. That's bipartisan. When it comes to privacy and antitrust, that has been harder, and frankly, we haven't done well enough. We ought to come to some consensus, at least on basic principles of privacy, making sure that people know what's happening to their data, that companies have a fiduciary duty to treat data responsibly, that you have to opt in to consent. And on antitrust, I think we're making progress. But again, I don't think you can have just a break up these companies philosophy or restrictions that don't take consumer welfare into account. If we can tweak some of the language to have that balancing test, then I think that can pass as well.
Do you feel an urgency to get something passed, something more passed on tech regulation ahead of the midterms because Democrats might lose control of the House?
Yes, Emily. I mean, I'm going to be straight. The president's party often doesn't do well in midterms, and we only have a 3-seat majority in the House. Do I hope we win? Absolutely. But we can't take the chance if things don't go our way. So we have a 1-year window to get something done, because I don't think a Republican House is going to do anything, and it would be absolutely problematic if we don't pass legislation, especially as we look to 2024 and the role that disinformation could play in disrupting our democracy.
California Representative Ro Khanna there talking about his new book, Dignity in a Digital Age. You can catch that full interview at Bloomberg.com. We also got into blockchain, cryptocurrency, the metaverse, and so much more. Coming up, more funding for crypto startups. Alexis Ohanian's firm 776 raising $500 million in additional funds to plow into the companies of the future. We'll talk to him about crypto, NFTs, social networks in a perhaps post-Facebook era, and more. Plus, later, I'll dive into the future of fitness with Rishi Mandel, CEO of the connected fitness company Future, and actress and investor Kate Hudson, also the co-founder of Fabletics. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I'm going to get back to those massive after-hours market moves. Our Ed Ludlow has had some time to recover, I hope. Ed, what's the latest?
Yeah, look, Snap's still up big in after hours, 54, 55%. It had been up more than 60% just a few moments ago. I think we just take a beat here and think about the numbers. Yes, they beat in terms of the user base. What was really interesting, they sneaked a profit, net income of 1 cent per share. Okay, is that a 1 cent per share profit? But it's interesting because it's their first ever as a public company. And what else jumps out at me from the call is this idea that they have not returned to pre-pandemic trends. So, for example, they're saying that people are not looking at their friends' stories on Snapchat like they were pre-pandemic. What they're looking at is at original content. That's where they're doubling down. Also, I hate to pick on Meta and Facebook, but if you remember, Facebook had really big problems in certain markets and regions where it actually shrunk rather than have flat growth. Well, let's bring up this quote from Evan Spiegel, of course, the co-founder and CEO of Snap, and he's talking about growth. He said they grew sequentially in all regions, but in North America and Europe, they're looking at making more money. They really think they can squeeze out more dollars. And in the rest of the world, emerging markets elsewhere, that's where they see growth. And so, you know, it's really interesting, this forward-looking idea. So we're hung up on this massive after-hours move. Let's bring everyone back down to earth. Remember, Snap has had a rough start to 2022. And when I say rough, I mean, look at this chart rough. Because this chart, of course, takes into account the massive drop that Meta had on Thursday. And Snap really underperforming. So let's see where we go, right, on Friday. Let's see how the market processes this overnight and if we have a continued or a snapback reality, forgive the pun, on Friday in tech stocks. But there's a lot to take on board here.
Right, this is all still just after hours moves. Ed
Right.
Ludlow, thank you. We're going to talk about this and more with our next guest. 776, Alexis Ohanian's venture firm, just raised $500 million for its new fund. The firm now has $750 million worth of assets under management, which is not quite 776 million, but close. General partner, founder Alexis Ohanian, also the co-founder of Reddit, of course, joins me now to talk about that and much more. Alexis, you couldn't get that extra $26 million to make it a round number?
Giving me a really hard time here, Emily. Look, we're not complacent. It's been a good first year. This gives us something to push for here in year two.
So what are the target areas? Where do you see the biggest opportunities to deploy all that cash?
Well, look, early stage is still the bread and butter, but we're also seeing huge opportunities from companies right as they start breaking out in growth. Sector-wise, I've obviously been on the Web3 train for a little while now, since seeding Coinbase all those years ago. But in the last 2 years, it has gone to another level. I've just seen too many really talented, really driven builders now moving into the space. And I think we're going to see some really interesting innovation to come from the next 5 years. And in particular in this space. So we're not focused entirely on Web3, still have space tech, climate tech, food tech, but the builders are certainly paving a way towards all things crypto these days, and that's going to keep us busy.
And, VCs are also pouring a lot of money into crypto. And I wonder, is all this money chasing the same startups? And could that lead to inflated valuations? I mean, FTX just raised at $32 billion, whether you consider that inflated or not. It's certainly a big number.
It is. And this is why I love being one of the first round investors. But it is also, I think it's true. There's a lot of interest. There's a lot of excitement. There's a lot of dollars flowing in. But like everything in this point in the hype cycle, it's still most important to focus on and double down on the clear winners. What's undeniable here is that this technology has proven a utility. We're only seeing the sort of earliest days of that utility, of the value of ownership. And for those of us, I was lucky enough to be part of the generation of Web 2 building a company like Reddit that proved and just showed a model for the world of read and write. And now what we're seeing, this whole Web3 jargon is really just about a third component, which is the ownership part. And we're just starting to see that with whether it's with gaming or NFTs or this infrastructure that now exists to let you benefit from a sense of ownership that has, I think, some tremendous implications down the line. And, we're just lucky to meet with great founders on day one and get to help them build that in. And I think you talked about some social media companies previously. I think it's going to be interesting to watch this transition because I think there's never been a better time to be a David among Goliaths, because the power of community and the organic sort of excitement that builds when you are part of something that feels much bigger than you, which is the nature of almost all of these Web3 projects, is hard to deny.
So let's talk about this. Obviously, we're seeing massive after-hours market moves here. Facebook today down, times more than 25%. Snap up after hours more than 60%. What's happening here?
Well, I certainly think, I don't spend time on the public markets really, but it seems like people have finally taken into account what we've been seeing for 6-9 months now, which is all of the savviest marketers in the 776 portfolio have been moving their dollars away from Facebook and diversifying to other ad products, because the Facebook ad product, thanks to the Apple iOS changes, it just doesn't cut the mustard anymore. It is not executing and performing in a way that makes sense. So the smart marketers are moving lots of dollars away into other platforms. It does not surprise me that Snap is seeing some of the beneficiary or is a beneficiary of that. But I think it also calls into question a model that, a revenue model like advertising that never really felt great to most of the actual users, of the people who are actually creating the content. And I think this intersection of community and capital that is really embodied in what Web3 unlocks is going to be a really fun one to explore, because we're going to see new business models that are created where the actual creators of the content, whether it's someone taking a selfie or someone coming up with a clever post or what have you, have a stake in it. their attention is more properly valued. And I think that's going to be a very big story over these next years. And I think what we'll find is that we weren't properly valuing attention. We weren't properly valuing community because the only crude tool we had was advertising. And that really doesn't do it justice.
Well, speaking of another community, Reddit's IPO is coming up. And I'm just curious what your reflections are on that as we approach that big milestone and as you're seeing some of these big shifts. What's Reddit's role in that shift going to be?
Well, look, I obviously very, very publicly left the board last year. I certainly wish the team there all the best. My focus these days is on 776. And I do think, there is going to be no shortage of big headlines in business press over this next year and for a while to come. We're seeing such a big shift in the role of the retail investor. And I know that, this is almost a 1-year anniversary from when I was on all these programs talking about Wall Street bets. I know there is still a lot of skepticism from folks out there. The reality is that there is a new generation. The digital native is thinking about their portfolio fundamentally differently than ever before. It's never, the 60-40 stock bond split is gone, right? It's not just, hey, I want to be able to trade stocks while, in the bathroom on my phone. It's also a diversification of alternative assets that ranges from everything from NFTs to trading cards. The dynamic here is so different now. And the retail investor, you saw a glimpse of the leverage they would have. I expect much more of it to come. And that means for CEOs, speaking broadly, there is a new responsibility now to not just think of yourself as a business leader, but also a community lead or almost a head of state. And it's something that I felt very unique explaining that scenario to people 15 years ago when Reddit was just starting out. But I really believe it's the model for new companies getting started now today. You have to be, especially if what you're managing has the kind of liquidity that, say, a token has. You have to be thinking consistently about your messaging, about what you're building. You have to be thinking about the community, the zeitgeist, just as much as you're thinking about the fundamentals of the business. And that's a responsibility not a lot of CEOs are going to be able to adapt to.
Well, speaking of NFTs, you recently gifted your wife, Serena Williams, a Bored Ape. Why are you so excited about NFTs and that in particular?
Look, my day job is venture investing, but every now and then I'm a bit of an NFT degen. I got in a year and a half ago or so, and I was excited by CryptoPunks simply because there seemed like there was a historical precedent there, and I bought my wife the Serena Punk that's now sort of become a meme. I think of these as art in a way, and as a sort of membership into a broader community. And that's not to say it's the only gift I give my wife. I still do traditional things, but I really do believe in the long-term value of community. And when I think about brand, right, and this is all on chain, right, this is all public, the secondary sales of something like Bored Apes is going to be in the tens of millions this year, right? So the money that they make just from you selling me an ape, the percentage, the royalty they make is meaningful money. And when we start to think about the power of brand, no one bats an eye when someone looks at the market cap of Nike. I don't know what it is right now, but that they're still getting a really generous revenue multiple. The business is in the business of brand, right? They sell atoms at the end of the day, but the value is the community and the culture. And there's been a precedent of brands that have built over decades from the bottom up using, clothing or what have you. This is a new medium. And it's the same nature of it, except it's so much more organic. It's so much more bottom up. Yes, it is weird, but that culture, internet culture, is the dominant culture going forward. And that's why I'm so excited to be so deep in the space, because it feels in many ways like early days Reddit, except it's not a sort of niche, fringe, early internet culture of 2005.
Interesting.
It's mainstream and it's global, and it has, I think, very big implications.
Alexis, I think you had a lot of folks out there listening, adding NFTs to their wish list just now. Thank you. Thank you, as always, for joining us. 776 General Partner and Founder, Alexis Ohanian. Alexis, we'll have you back when you get that extra 26 million. Coming up, crypto regulation. When is it coming and how strict will it be? We'll hear directly from SEC Chair Gary Gensler about what's ahead for the market in 2022. That's next. This is Bloomberg. After several hearings and much talk about regulation from the SEC, crypto platforms and exchanges have been waiting for the government to make its moves and provide more clarity on the rules of engagement. My colleague David Weston spoke with SEC Chair Gary Gensler in an exclusive interview earlier. Take a listen.
We do have a broad agenda, and crypto is part of that agenda, but it's an agenda really to make the capital markets work better for the investing public and for the companies on the other side, to drive more efficiency in these markets. As to your question about crypto, the agency is really just looking out for investors, and many of these tokens, not trying to prejudge anyone, but many of these tokens have the attributes of securities. They're raising money from the public, and the public is anticipating profits based upon the efforts of others. And so we've brought a number of actions. We're trying to work with the various crypto platforms, the exchanges, the lending platforms to come in, get registered, find where we can to adjust our rule set to get the investor protection for the public.
As you say, you've encouraged the exchanges to come in and get registered. At the same time, a lot of them have not, as far as I can tell. At what point do you have to force them?
Well, no, it's because, look, if you're a platform and you have 75 or 100 or sometimes 5,000 tokens on that platform, probabilities are that a number of them, and maybe many of them, are what's called a security. And it's Congress painted with a broad brush. And it comes down to this: are you raising money from the public, and the public's anticipating profits based on the efforts of others? My predecessor, Chair Clayton, the agency that I'm honored to chair at this point in time, is going to try to pursue investor protection. And if that means bringing greater enforcement actions, we'll do that. But it would be better to have these platforms come in, work with us, and come under the securities laws.
Do you think you've done everything you can under the statutes as they exist now? Do you need legislation in order to really go after and really get registration from those exchanges?
I think that the laws are pretty clear as laid out in the 1930s. And we have an ability to work with these exchanges using various authorities to basically tailor some of these, because these crypto exchanges and lending platforms have operated differently than the traditional New York Stock Exchange. But would it be helpful to work with Congress on some things? I've said this in the past around some details around transfer agents and others. Yes, but unless Congress says otherwise, we have to ensure there's investor protection in this space. And we're going to work with the Commodity Futures Trading Commission, where there's some that are commodity tokens, because while many of these are securities, some may be under their remit. And we work together as two federal agencies.
SEC Chair Gary Gensler there to digest it all. It is time for our cryptocurrency segment with Sonali Basak. Sonali, what do you make of Gensler's remarks?
Yeah,
and the daunting task of figuring out how to regulate crypto?
Well, that's exactly right, this daunting task here. On one hand, from a Wall Street perspective, you have existing financial firms very worried that the SEC is not going to be able to get a handle on the Wild West that's been created out of all of these crypto products. On the other hand, from the crypto perspective, you have them watching very closely, looking at what the SEC is saying is an attribute. An attribute is the word he keeps using of an existing security, so that they can use enforcement actions or add-on rules to new products that look like older financial products, Emily. So how the chairman starts to mold those existing rules into this new industry will be of critical importance to how they start to enforce and create new laws.
So I want to talk about, in other news, this $320 million that was stolen from the Wormhole crypto project. It was restored. But in the absence of kind of formal regulation, how is the industry trying to self-correct these big issues?
Yeah, this was so interesting because hacking is something we're not talking about when we talk about regulation necessarily in itself. So the Wormhole project was so interesting because with 120,000 wrapped Ether being taken, we saw Jump Crypto really step in here and make customers whole once again. And you see them finally self-correcting something, and it might be expensive, but it is something that they're able to do themselves.
All right, Shonali Bosick, thank you for that update. Coming up, the pandemic changed how we view fitness and working out. My next guests have a few thoughts about the future of fitness. I'll be speaking with Rishi Mandal, co-founder of Future, and Kate Hudson, an investor in Future, about the fitness landscape. That is next. This is Bloomberg. Digital fitness company Future, which connects users with trainers to get a better workout, just raised an additional $75 million. Investors in Future include a number of big names. Joining me now, the co-founder of Future, Rishi Mandal, along with a familiar face, Kate Hudson, an investor in Future, and of course, the co-founder of Fabletics. Rishi, Kate, thank you so much for joining us. Rishi, this is a lot of cash as the fitness industry is changing in a pandemic, coming out of a pandemic. How do you plan to plow this money into your vision for the future?
Well, look, what we think is about to happen is we're going to see an explosion of one-to-one coaching, of remote experts in people's lives around all sorts of topics in their health, whether that's fitness, that's what Future does, or mental health through text message therapy, or a whole variety of things, how we're eating and sleeping. And so what we've seen in the pandemic is an acceleration of technology adoption. There's been
Hey, Kate, are you there? You are.
I'm here.
It looks like we're having some problems with Rishis Shot. So you're an investor in Future. You and your brother,
I am.
Oliver, and obviously you've spent many years building your own lifestyle and wellness brand, Fabletics. What attracted you to this opportunity?
Well, it's funny. I met Rishi and the team because my brother was working with them, and I would see him doing all these Instagram posts, going, "What are you doing?" And then of course I got more and more interested, got to know these guys, and I think they have something that's really powerful, and that they have the right setup to really help people in this space, and I'm very focused on mission-driven companies, especially and mainly in wellness and in health and wellness. And so they called and said, "Would you want to partner and do a podcast that really focuses on these things as they come into this next big round and this next big push?" And I was like, I would love to. Our missions are aligned, and we can really focus in on talking about things that we both really believe in that are really important, which is, how we can support our wellness and how we support each other. And the thing about Future that I really love about what they've created is that it's a coaching platform. You actually have a real relationship with, with a one-on-one coach. And there's really no other platform that allows you to do that. It keeps you accountable, and I look forward to see what other areas they expand into, because I think we need more of that human connection through technology.
Rishi, you're back with us. Look, we've seen Peloton stock heading downhill. We've seen people go back to the gym, get outside and exercise as the pandemic waves have changed. What makes you think that your vision for the future really is the future? We've got about a minute left.
What's just so different about Future is that we are agnostic to what you're doing for your fitness. You might on a sunny day be outside hiking, and then on a different day want to hop on your Peloton. And then you might also want to do some strength work. And your coach every single Sunday builds a new training plan for the week, understanding where you're going to be, what your travel plans are. And then we send you that Apple Watch. So even if your coach is, say, 1,000 miles away from you, they can see what you're doing, keep you accountable. And accountability is what's new here. The history of fitness is people have content or equipment or places to go, but nothing sticks. And with a real human, that's what we're solving for here.
All right, Rishi Mandal, Kate Hudson, I look forward to continuing this conversation, seeing where you take this. Thank you so much for for joining us. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Join us tomorrow. We're going to be talking about the payroll report. This is Bloomberg.